Stay tuned for Kalkine Media. Please subscribe to the channel and press the bell icon to be notified of the latest videos. In today's trending topic, we're going to cover how much should one invest to make approximately 3,000 Australian a month. And getting an extra income in the form of a dividend on a long-term stock is not a bad idea, especially during the times when interest rates are falling. Dividend incomes could be a better option than the interest income on bonds. And the good part of this form of passive income is all the hard work that goes into selecting the right stocks for the portfolio. And it's done only once, whereas the benefits could be reaped for decades. And most of the times an investor has a fixed goal in mind as to how much dividend income he wants to scale up to in the future, and that enables him to chart the course of action towards that trajectory. And this could include planning for monthly investments, a judicious mix of high yield and low yield stocks to manage the risk at the portfolio level, etc. Before diving into how an investor can plan for 3,000 Australian a month of dividend income, one thing needs to be clear, that there is no one right way to make a portfolio for dividend income. There are numerous variables that go into chalking out a plan for dividend income, which varies from investor to investor. And on that note, let's have a look at how one can create a portfolio to get 3,000 Australian dollars a month of dividend income. First up, target an average dividend per dollar of investment. Selecting a good dividend paying company is very crucial, and before doing so, one needs to be clear on how much dividend per dollar of investment he's aiming for. The dividend you receive on $1 Australian dollar of investment will ultimately decide how much money you need to put in to rake in the desired dividend amount. To make it simpler, an investor can look at the dividend yield ratio. That simply compares the dividend paid with the share price of the company, and the dividend per individual scrip may vary, and average yield could be maintained at a portfolio level. So let's say investor B is looking for a dividend yield of around 10% for his dividend income portfolio. He may start looking for stocks that generate a dividend yield of about 10%. Next up, pay heed to the quality of dividends. The quality of the sustainability of dividends is probably more important than the dividend itself. A company that has paid a healthy dividend in the past couple of years but has no history of dividends before that could be a risky bet, as the future trajectory is difficult to judge. Also, one-time special dividends can help shoot up the dividend yield, which also needs to be accounted for, as these dividends are once-in-a-while payouts. Other key checks such as financial health of the company, management quality, competitive advantage also help in separating the wheat from the chaff. So coming back to investor B, he may ignore small cap companies to minimise his risks and look for well-established businesses. Hence, he might select Fortescue Metals Group Limited, which is the fourth largest iron ore producer in the world, trading at a yield of 10.9% as of 9th of June 2021. Next to look out for is gauge the amount of investment. After filtering out the quality of stocks based on the targeted dividend yield, an investor can easily calculate the amount of money he needs to invest to garner that passive income. And for example, if a company's share price is trading at a dividend yield of 5%, then on an investment of $100 Australian, an investor can expect a dividend of $5 Australian. And this helps the investor to get an approximate idea for the amount of investment needed for the desired dividend income. And now investor B may simply calculate the amount required for a dividend income of 3,000 Australian dollars a month. The current share price of FMG is $22.65 Australian, and that translates to a dividend income of $2.46 Australian per share per year. Trimming it down to the monthly income, it stands at 0.205 Australian dollars per month per share. So by now, it is clear that an investment of $22.65 Australian would fetch a dividend of 0.205 Australian per month. So how much would investor B need to invest to amplify it to 3,000 Australian a month income? Approximately a sum of $331,436 or 14,634 shares would be required. And this method is used for one stock, and the same can be applied for other stocks as well. It is always better to have multiple stocks in the portfolio to mitigate the risk of any one stock. Next to look out for is keep tracking the portfolio. Despite laying out an entire course of action, an investor needs to accept the fact that financial markets are ever changing and dividend payout is highly dependent on the earnings of a company as well as its dividend policy. And the management can make amendments in the dividend policy anytime to increase or decrease the dividend payouts. Also, the earnings of a company never remain constant. There is a plethora of uncountable factors that directly or indirectly affect the earnings. If a company's earnings are looking good today, there is no guarantee that it might not go to the dogs tomorrow. The share price also fluctuates within seconds, which affects the dividend yield. A stock going down in price could fetch a higher yield despite the actual dividend being constant, and could be utilised for dollar cost averaging if that stock is already in the portfolio. So if FMG, for example, share price falls in the future as the price keeps on fluctuating, Investor B can add more FMG shares to his portfolio at a higher yield. Thanks so much for joining us on this report. Hope that's been of use to you, and if you like this information, please like, share and comment on the video below and subscribe to the YouTube channel. Press the bell icon to be notified of the latest videos, and for more information and regular updates, please head to the website kalkinemedia.com, and this is Sage for Kalkine Media.